What are eviction timelines after foreclosure? Have you ever wondered what happens after a foreclosure is finalized? Specifically, what the eviction timelines look like. Understanding this process can be really important for anyone involved in mortgage loans or personal finance. Once a foreclosure is complete, the timeline for eviction can vary quite a bit based on state laws and the situation surrounding the foreclosure. First, let's talk about the completion of the foreclosure and the redemption period. After the foreclosure process is finalized, the bank or credit union can only start eviction once the homeowner's legal rights to the property have ended. In some states, there is a redemption period. This is a time frame during which the former homeowner can reclaim the property by paying off the debt. This period can last anywhere from a few weeks to a year or more, depending on local laws. Eviction cannot happen until this period is over or waived. Once the foreclosure is finalized and the redemption period has passed, the lender will issue a formal notice to vacate. This notice typically gives the former homeowner between 3 and 30 days to leave the property voluntarily. If the occupant does not leave by the end of this notice period, the bank or credit union must file an eviction lawsuit, also known as an unlawful detainer action. This legal step requires going through the court system, which can add more time to the eviction process. Now let's look at how timelines can differ by state. For example, in Texas, the foreclosure process is generally non-judicial and can move quickly, often taking 60 to 120 days from the first missed payment to the foreclosure sale. After the sale, the timeline for eviction depends on local laws. The lender must still provide notice and may need to pursue eviction in court if the occupant does not leave voluntarily. It is also essential for banks and credit unions to comply with all legal requirements for notices and court procedures. This helps avoid delays or legal challenges. They usually work with legal counsel or specialized agents to manage the eviction process efficiently while respecting the rights of the former homeowner. In summary, the eviction process after foreclosure is a legal procedure that begins only after the foreclosure is complete and any redemption rights have expired. The timeline from the foreclosure sale to eviction can range from a few weeks to several months, depending on state laws and whether the occupant leaves voluntarily after receiving notice. Understanding these timelines can help you navigate the complexities of mortgage loans and foreclosures more effectively.